Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
What we see is that the SEC waited 8 years to decide they disagreed with this analysis, decimating thousands and thousands of XRP holders in the process. So much for being mission driven. And this was in response to Stuart Alderodi tweeting out the conclusion of these now public 2012 memos is clear. XRP do not constitute securities. XRP is not a security. And what we are seeing right now is massive whales accumulate XRP. We could be getting very close to the end of this battle with the SEC. We could be getting very close to a resolution in this case. And we could be getting very, very close to regulatory clarity for XRP. It's been a long, long battle, but it seems as though it is coming to an end. This is why we are seeing crypto whales gobble up over $708 million in XRP with this accumulation spree. Big whales, even retail investors, are accumulating XRP because of what could potentially happen at the end of this case. And mind you, there are major implications on the crypto space, not just XRP, from the ending of this case. So people are preparing, and that is the key word here, preparing for what is going to come from the end of this case. It could be very, very huge for XRP, given the fact that XRP has been looked at not only as a banker's coin, but now a potential security that could possibly, as some say, go to zero. But with all that being out of the window, XRP has so much room to grow, so much room to be adopted, and on top of that will be the only digital asset in the crypto space with regulatory clarity in the United States. How about that? This could be potentially why we are seeing the rise in the price of XRP. We saw XRP shoot up almost 6% in 1 hour. XRP, yes, we know, has a lot of room to grow and still has not reached its previous all-time high. But with the news of XRP not being a security and having regulatory clarity, a lot of people could potentially miss out on major price action that comes from XRP after that news has been broken. You don't want to wait until that happens. You just don't. And most people will FOMO in like we have never seen before if the price of XRP does shoot up and have that nice price action, given the fact that it has regulatory clarity and is the only digital asset with regulatory clarity in the United States. It's going to be a movie. One that we have never seen before. And this is history in the making. And this is why I'm excited. And this is why I continue to stay bullish on XRP despite what is happening right now. Now I want to talk about something here. And it's the central banks preparing for this new financial system of the future, as they call it. The Federal Reserve and the ECB are working together, and they both gave speeches at the U.S. Monetary Policy Forum in New York. We're going to talk here about the Federal Reserve first, and then we'll move on to the ECB. We'll talk about the similarities. We'll talk about what they're planning to do next. And we're going to talk about how they understand, like we do, there's a lot of things taking place right now. The space is moving fast. The world is moving into a digital economy and a new digital financial system, a global digital financial system. And we're going to talk about how these central banks know that crypto is here to stay and is taking over. And we'll talk about their fear of stablecoins taking over central bank money. So let's get into it. The Federal Reserve put out this speech yesterday, preparing for the financial system of the future. And they start off talking about this. The financial system is undergoing fast-moving changes associated with digitalization and decentralization. So now we have the Federal Reserve telling us that the financial system is not only changing, but they're fast-moving changes, and it's associated with digitalization and decentralization. They talk about how in recent years there has been explosive growth in the development and adoption of new digital assets that leverage distributed ledger technologies and cryptography. This is true. We are seeing explosive growth in the crypto space, and this is why we are seeing crypto become more and more adopted. The Federal Reserve states the prominence of crypto advertisements during the Super Bowl highlighted the growing engagement of retail investors in the crypto ecosystem. And we're seeing exactly that. The masses start to FOMO in. The masses start to do their research and get involved in the crypto space because of these ads, because of all of the information that is coming out around crypto. And they go on to state, so it's perhaps not surprising that established financial intermediaries are undertaking efforts to expand the crypto services and products they offer. If the past year is any guide, the crypto financial system is likely to continue to grow and evolve in ways that increase interconnectedness with the traditional financial system. And this is exactly what we've been talking about. The merging of the two, the new with the old, right? The systems coming together as one. Because we know the digital system is too powerful and it will overtake the old, slow, and traditional system. So they have to adapt to what is taking place here. And that's exactly what the Federal Reserve is telling us they are preparing to do. They're preparing to do exactly that. Have been doing it for years, but now they are coming out and being more vocal about it as we're getting closer to that transition actually taking place. And here they say this: as a result, officials in many countries are undertaking efforts to understand and adapt, here we go, to the transformation, here we go, of the financial system. Many jurisdictions are making efforts to ensure statutory and regulatory frameworks apply like rules to like risks, and some jurisdictions are issuing or contemplating issuing central bank digital currencies. Central bank currency in digital form. Now they're doing this because the fear of stablecoins taking over, but we'll talk about that. They say the Federal Reserve needs to be preparing for the payment landscape of the future, even as we continue to make improvements to meet today's needs. And everyday individuals should be preparing for this new future system that is being set up. They talk about certain challenges remain, such as lack of access to digital banking and payment services for some Americans, and expensive and slow cross-border payments. We know cross-border payments is a major issue, and this is where Ripple and XRP come into play to solve that major problem, right? You got to be solving a problem, and XRP is a solution to the slow cross-border payments problem. Now, the Federal Reserve in this speech goes on to state the digital asset and payment ecosystem is evolving at a rapid pace. This is something we've been talking about for years now. And they state, thus, it is also important to contemplate the potential role of a CBDC to promote financial stability in a future financial system in which a growing range of consumer payment and financial transactions will be conducted via digital currencies such as stablecoins. This is where the fear starts to kick in. And this is why I don't buy in to any of the stuff that the central banks are talking about, how they're not sure or they're not ready to potentially issue a CBDC. We know at some point they're going to do this because of the fear of stablecoins taking over. And here's what they say. In such a future state, the coexistence of CBDC alongside stablecoins and commercial bank money could prove complementary by providing a safe central bank liability in the digital financial ecosystem, much like cash currently coexists with commercial bank money. It is essential that policymakers, including the Federal Reserve, plan for the future of the payment system and consider the full range of possible options to bring forward the potential benefits of new technologies while safeguarding stability. So they talk about coexistence, they talk about sitting side by side, being complementary. They say all of this so it doesn't seem like the central banks are pushing ahead with something too strong to the point where they will take certain things away or overpower certain things like cash. But we all know at some point, cash will be a thing of the past. It's not yet, but it will be. And that's something that the ECB talks about in their speech, which we're going to get into in just a second. Now, the Federal Reserve goes on to state, given the dollar's important role as a payment instrument across the world, it is essential that the United States be on the frontier of research and policy development regarding CBDC, as international developments related to CBDC can have implications for the global financial system. This is why they're doing the research. This is why they are going to issue a CBDC, because they understand that there are major implications for the global financial system if they do not. They talk about, given the range of possible future states with significant digitization of the financial system, it is important that the Federal Reserve is actively engaging with the underlying technologies. This is why they're doing so much with their research. And they talk about right here, in parallel with the board's public consultation on CBDC, the Federal Reserve Bank of Boston, in collaboration with MIT, has developed a theoretical high-performance transaction processor for CBDC, and this is Project Hamilton, which we talked about a few videos back, where they did their testing on a CBDC, the same CBDC that they say they have no plans of issuing as of right now. Now let's get into this conclusion because it is very impactful. It says the financial system is not standing still, and neither can we. We are seeing the Federal Reserve tell us exactly what they are doing. The digital financial ecosystem is evolving rapidly and becoming increasingly connected with the traditional financial system. It is prudent for the board to understand the evolving payment landscape, the technological advancements, and consumer demands driving this evolution, and the consequent policy choices as it seeks to fulfill its congressionally mandated role to promote a safe, efficient, and inclusive system for U.S. dollar transactions. To prepare for the financial system of the future, the Federal Reserve is engaging in research and experimentation with these new technologies and consulting closely with public and private sector partners. These central banks are unveiling what they are planning to do next. They are telling us that they have a plan, they are planning, and they are preparing for the financial system of the future. This is information we need to soak in and help us prepare ourselves for what's getting ready to come next. Now, the ECB gave a speech at the U.S. Monetary Policy Forum, very similar, so I won't touch on everything that they talked about. But they talk about central bank digital currencies, defining the problems, designing the solutions. There's a couple of things I do want to highlight though. The ECB states throughout history, money and payments have been constantly evolving. And this also holds true in the digital age. As we increasingly pay digitally, and shop online, we rely less on cash. And this is the key here. As we move towards this digital economy, as digital assets like XRP become more adopted, people will rely on cash less and less. And they state, our wallets are gradually moving from our pockets to smartphones and other electronic devices. This is everything we've been talking about, especially since the start of the so-called pandemic. The ECB states these changes have profound implications. Here we go with these implications, okay? For the nature of money itself, raising the question of whether central banks should issue digital currencies for retail use. We know that that is what they are planning on doing. Fabio Panetta, who was giving this speech, stated, I will argue that in a digital world, CBDCs are necessary to preserve the role of central bank money as a stabilizing force at the heart of the payment system and to safeguard monetary sovereignty. So we already know they have a positive outlook on CBDCs, despite what the public could potentially be thinking about CBDCs. And they've even given us information stating that the public does not like the thought of the CBDC for privacy reasons. And they talk about that a lot, but we're going to focus on what they're talking about here. Bank runs. The ECB states bank runs and financial crisis start when confidence in the convertibility of private money evaporates. Without the anchor of sovereign money, people would constantly have to monitor the soundness of private issuers in order to assess the value of each form of private money. This would undermine confidence in the singleness of money and impair the functioning of the payment system. So, bank runs could potentially be a major thing, and we are seeing that start to be a topic that is being discussed. They state in the digital age, however, banknotes could lose their role as a reference value in payments, undermining the integrity of the monetary system. Central banks must therefore consider how to ensure that their money can remain a payments anchor in a digital world. This is the sentiment that is being given by both the Federal Reserve and the ECB. They want to remain in control. If they do not adopt this new technology and adapt to the changes in the systems, they will fall behind and something else will take over. Here they say, in the absence of public money, stable coins, which they fear so much, could exacerbate the winner-takes-all dynamics inherent in payment markets, with adverse consequences for the functioning of the payment system. And they go on to state other threats to monetary sovereignty could emerge in the absence of a domestic digital currency. So they're giving us all the reasons as to why they potentially need a CBDC or some type of domestic digital currency in order for the system to stay afloat. They state if a foreign CBDC were to be widely adopted, this could lead to digital currency substitution. And this is a fear of every central bank. And this is why they say this risk would be higher for small countries with unstable currencies and weak fundamentals, especially if the CBDC were issued in a major economy. So we could see countries start to adopt different countries' currencies based on the power they have from implementing these digital currencies. And this is why they state such risks are not imminent, but they should not be underestimated. Just as the US dollar overtook the pound sterling as the leading reserve currency within only a decade of the end of the First World War, digital innovation may give rise to powerful new foreign contenders with disruptive consequences for those markets that are not prepared to face the digital challenge. This is why so many central banks have been either hush-hush about what they're planning to do. They want to watch what others are doing, learn from others. This is why we're seeing the Federal Reserve out of all central banks state that they don't have no plans, or they're only doing this right now. They're not really focusing on that right now. They have been strategically making their moves and saying what they're saying based on the fact that they want to learn, but they do not want to be left behind because of what could happen from this right here. They don't want to have powerful new foreign contenders come in and disrupt their systems and have things change. This is why they're doing the research and are potentially ready to roll out these CBDCs at a moment's notice. Now, the ECB states one might argue that private service providers are already well equipped to offer low-cost digital payment solutions. However, the limited evidence available suggests that low-income households use digital payments less than high-income households. This is consistent with the hypothesis that digital payments remain expensive for many users. And even in advanced financial systems, many citizens are unbanked or underbanked. We've heard a lot about this with banks and even with digital asset projects, talking about how the unbanked needs to be banked and how the underbanked needs more services. The ECB states although financial inclusion depends on several factors such as financial and digital literacy, the cost of financial services is likely to play a role. So they want to make this available to everyone if they're going to have these digital forms of currency. And that's why they state our digital euro project comes with a commitment that all, including vulnerable population groups, will have access to safe public money in the digital area. Now, here they talk about how to ensure that our digital currency will be a convenient means of payment. We are working to make it available within private payment solutions so that people will be able to use it easily wherever they can pay digitally. So that means anywhere and everywhere. And they state we aim to level the playing field by allowing intermediaries, including small ones, to offer innovative solutions to their customers. And we are considering how a digital euro could improve financial inclusion. So something that they've been talking about, if you looked at any of their documentation from years past, they've been focusing on financial inclusion, and that's something that they are really, really honing in on now. But here's the conclusion. Very similar to the Federal Reserve, and you can see the similarities here. The digitalization of payments cannot be ignored by central banks, and it's not being ignored by central banks, nor is it being ignored by major organizations. They state, cannot be ignored by central banks, which have so far provided their money only in physical form. So they know they need to switch. They know that the transition is coming. Central banks cannot escape these transformations, nor should they underestimate the potential for far-reaching shifts that may occur. This is exactly what we've been talking about. They cannot escape the transformation. They know that crypto's taking over. They know that stablecoins could potentially take over. They do not want to miss out, so we shouldn't be missing out, but they know they have a lot to lose if they don't adapt to this new technology. And this is why they say to ensure that public money maintains its fundamental role in the digital age, the ECB has launched an investigation into the possible issuance of a digital euro alongside cash. They have to say alongside cash so you don't get scared that the CBDC is going to take over your cash and you're not going to be able to use cash anymore, but that could potentially be what the future is going to give us. Now they finally say our expertise may provide useful insights for other central banks, and likewise we are keen to learn from them. I am therefore, this is Fabio Panetta speaking, pleased to exchange views with US experts, and I am now looking forward to our discussion. So, found this out from both the ECB and the Federal Reserve because they posted their speeches at the minutes apart, but about at the exact same time here yesterday from their meeting in New York. So, this is huge. This is a lot of information to unpack, and this is a lot of information given to us by two major central banks, literally telling us exactly what we've been talking about. Central banks preparing for this transition. There is A, transition taking place, B, a movement into a digital economy, and C, right, cryptocurrencies, C for cryptocurrencies taking over. And they know that they cannot just sit here and watch as cryptocurrencies take over the entire world. This is why we're here. This is why we are so bullish, and this is why we will continue to stay bullish, especially while all of these major things are taking place with this case. It's all happening at a perfect time, happening at a right time, and we are in the right place at the right time.
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.